To give us a summary of the day's trading on the Naira, we're seeing that Naira under pressure like all other emerging market currencies. Here in South Africa, we've got the Rand touching 837. We've got the Euro down to 129, below that crucial 130 mark against the dollar. Is that all we're seeing, or is there more here in terms of why the Naira is weaker today?
Well, I think if that's a contributing factor. Generally, all the markets are seeing some risk aversion and safe haven flows into the dollar, and that on the flip side is also affecting the currency front here. But overall, if I look at how the Naira has traded for the past three sessions from the start of this week, it's I would actually say it's held up well in face of what the global plunge or the global direction of flows are seeing currently. Even on the bourse for this week, it's really been not deep red as we've seen across other countries, but even though slightly red, slightly negative so far, but overall I think it has held well. I think maybe we've hit the highs because I mean 2 months back we saw Naira trading up to 167, so it's really not so it's really holding quite well for now.
Absolutely, I agree with it's holding quite well, because over the month we're looking at a depreciation of 2.6%. When we compare against other currencies like the Rand, for instance, that's a much better improved performance. But so let's talk about where you see the Naira ending the year against the dollar. At least let's talk about the interbank market first.
Well, now that's a pretty interesting call to make. But we think Naira being capped at 163 for now, we actually think we might see a bit of strengthening on the currency into the year, and a couple of business demand waning from manufacturers and the likes, a couple of oil flows bringing in liquidity into the market. Those might continue to put additional support on the currency. We might actually see it either stable at this level or trend a bit lower, and Naira gaining into the 160 mark.
Yeah, now the government has put its stake in the ground, so to speak. 155 is what the budget benchmark has been put at against the dollar. How feasible is it that the government will be able to hold that exchange rate? We know it's the one that has also come from the central bank.
Yes. Well, I think they would continue to introduce measures to reduce a lot of speculative demand. We get the sense from the central bankers that they think there's a high level of speculative demand on the currency front, and that's why you see the currency weaken this far or this high at this rate. And I think they will continue to introduce measures to ensure that the Naira trades within those bands. Over the past few auctions, if you look at the CBN window, you've seen some form of stability at that window, and if they've succeeded at that window, I think furthermore they'll be looking for a way to see if those measures can be put into the interbank market and how it plays out also. I think overall they'll want to maintain that band. It's 155. 150 to 160. I think they would look at maintaining that band, and I think I really wish they would be successful in ensuring that happens. But if you see the global downturn come down in full force, you see oil prices and demand winning, I really wonder how far they can go on that. Yeah,
no, basically the surprise for me is that they are maintaining this band, 155 against the dollar, when we know that they are also forecasting high economic growth. The Nigerian economy, they are putting at 7.2%. One would expect that with that growth will come demand for Forex as the economy grows, as Nigerians consume more from outside products.
Yeah, but you wouldn't remove the fact that a lot of projects are being touted to be more of infrastructure in nature, and that's supposed to encourage local production and in turn reduce the external demand from the external sources. Those are the factors that they are being considered, and if you weigh it on a balance of scale and it happens the way it's been touted to happen, then you really shouldn't see so much of a high demand in terms of foreign exchange from the window. Not removing the fact that the non-oil sector is expected to grow and also become a good earner. So if you have that sector growing and producing more, adding more to the reserve, then whatever additional or demand that might come in, you have some form of savings that would be able to take care of those demand, and as such, on an overall scale, you have a good balance in terms of pricing and in terms of the reserve level. Those are the factors I think that they're considering, and those we are hoping and expecting will work out according to their plans.
But I imagine as well they stand ready to use that those oil forex reserves coming out of the oil sector. The oil price set at $70 per barrel. Not a bad number according to some analysts whose reports I have seen. And at the same time, we're expecting a slight increase in the amount of oil that's going to be produced. So they do have ammunition to defend the currency should the need arise.
Well, I think we've seen in the past that they've done quite a bit, and I think we've seen in the past also that history has shown that they have quite a number of ammunition. The only concern I would have is the ammunition enough to take it to the levels that they require? That's the only concern. But in terms of having enough ammunition, I think they do. I think they will come up with something. I think they'll be able to maintain they should be able to maintain the cap. But I think also not undermine the fact that the CBN could be flexible and we might just see a shift on the base rate.
Nwabueze, the final word, forecast for 2012, range on the interbank market.
Well, Godfrey, that's a pretty interesting one to make here. Overall, I think we'll be looking at price stability. I think one of the things that in 2012 would be a bit much avoided would be in terms of volatility. I think the central banker would be interested in reducing the level of volatility into a more reasonable band.
Yeah.
I think we might see trade currently at the upper band of their region of 160 levels for 2012.
Upper band is what he is using in the region of 160 against the dollar on the interbank market. Nwabueze Okonne, forex expert at United Bank for Africa. Thank you for joining us.